Hey everyone, welcome back. It seems like Wall Street's got a serious case of the holiday cheer, right?
hmm
The market's opening super strong today,
Yeah.
tons of optimism.
Yeah, lots of positive vibes for sure.
So let's, break it down a bit. Why all the excitement? What's got investors so pumped?
Well, a few things are converging at once. We've got some really solid earnings reports coming out, especially from tech companies.
Oh yeah, I was just looking at those numbers. Companies like Salesforce, Marvell Technology, even Okta. I mean, we're seeing massive gains, like pre-market surges of 13%, 20%, that kind of stuff.
Exactly. And that kind of performance, especially from big players in tech, it's a huge driver. It's helping push both the S&P 500 and the Nasdaq to, well, record highs.
So it's like tech's leading the charge, right?
Right.
But it's not just a tech story, though, is it?
You got it. It's broader than just one sector. I mean, look at financials. They're doing really well, too.
Right.
Some analysts are even upgrading their outlooks on those. And then you've got energy, particularly renewables, attracting a ton of investment.
So it's like a good sign all around. It kind of feels like everyone's getting in on this rally. And hey, it's December, right?
Right.
That's usually a pretty good month for stocks.
Yeah.
Gotta love that Santa Claus rally.
Yeah, that's definitely in play. And I think what's adding to the momentum is the anticipated rate cut by the Federal Reserve. It's expected this month, right?
Yeah.
And investors are already factoring that in. A rate cut could give the whole economy a boost. That kind of confidence leads to buying, plain and simple.
Makes total sense. It's like a chain reaction. But we did see some, I guess, some fear earlier this year about a potential recession, right?
Oh, yeah, for sure. But remember that whole yield curve inversion thing? Well, that's uninverted now, which is a pretty positive sign.
So explain that to me, the uninversion, I mean. What does that actually tell us?
So basically, short-term interest rates are now lower than long-term rates.
Yeah.
And that shift suggests that those recession fears we had, well, they might be fading.
Gotcha. That's good news. So it sounds like we're in a pretty sweet spot, at least here in the U.S. What about globally, though? Is this optimism like a worldwide thing?
Yeah, actually, it seems to be. You look at some of the major international indices, like the DAX in Germany or the FTSE in the UK, they're closing higher too. So there's definitely a global wave of positive sentiment happening.
Okay, that's interesting. So it's not just us, huh?
No, seems like the good vibes are spreading.
All right, so it's all sunshine and rainbows then. No bumps in the road, no potential hiccups.
Well, hold on. Not so fast. I mean, it's not like every single company is crushing it. There are some who are missing their earnings estimates.
Oh, right, right.
I'm thinking Foot Locker, Campbell's Soup. Those are a couple that come to mind.
Right, okay.
And that mixed performance, particularly in sectors like consumer goods or retail, it's a reminder that things aren't perfect, right?
For sure, for sure. And on that note, what about, those bigger picture risks, the things that could really throw a wrench in things?
Yeah, there are always potential headwinds to keep in mind. Like, think about geopolitical tensions. The whole U.S.-China trade thing is still a factor, right?
Right.
And then there's the conflicts in the Middle East. All of that stuff has the potential to disrupt supply chains, create uncertainty.
Definitely. And we can't forget about climate change either.
Oh, absolutely. Climate-related disasters are happening more often, and they can definitely have an impact on things like energy prices and, even global stability.
It's true. Those are some serious things to consider. And then there's the whole strong dollar situation, right?
Yeah.
I mean, how did that play into everything?
Yeah, good point. The dollar being strong, it can actually impact multinational companies. Makes their exports pricier, can affect their earnings. It's something to keep an eye on for sure. It can create some headwinds, especially for certain sectors.
Okay. So as we head into the new year, I mean, there's lots to think about. What are some key takeaways here? What should investors be watching closely?
Well, I'd say keep an eye on those economic data releases, especially when it comes to employment figures. And, any commentary we get from the Federal Reserve, that's going to be huge. Those things could really shift market sentiment pretty quickly.
For sure.
Yeah.
It sounds like a lot is riding on what happens next.
Yeah, it's a dynamic situation for sure. The key is to stay informed, be prepared for potential volatility, and, don't panic.
Great advice. So let's recap. The market's kicking off December with a lot of optimism. Strong earnings, positive policy expectations, tech sector leading the way. But there are some potential risks and uncertainties out there. It's definitely a complex and ever-changing world.
That's for sure.
Well, thanks for joining us today as we navigated this market update. Please like and subscribe if you enjoyed this content.